Good morning and welcome to the Man Over Market live trading session for February 23rd, 2015. It's 10 a.m. Central Standard Time, and Lewis Borsellino will be sharing his charts with you. While this is a live trading session, please be aware that there's approximately a 30-second video transmission delay. Also, please note that we have this disclaimer on this production. Trading futures, options on futures, and retail off-exchange foreign currency transaction involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. The following information is an expression of our opinions and is provided for educational purposes only. Again, today is February 23rd. It's 10:01 a.m. Central Standard Time. Go ahead, take it away, Lewis.
All right, thank you, Debbie. All right, good morning, everyone. I was hoping for a little more volatility, but it looks like the market's starting to rally. We started out this morning thinking that we'd have a bullish bias, and I thought about that we should be filling in the single prints from left out there on Friday. So this was unfinished here, bottom from Globex. We took it out this morning. Here was the single prints I was referring to, and we went down to 20,099.75. It's kind of hard for me to say those numbers because I think I was writing 200 on my cards when I first started trading. So anyway, the chart you see here on the left is a market profile chart. We have just started in bracket E. The IB range is, so the first hour of trading basically was contained inside bracket B with a high of 21,005 and a low of 20,099.75. We have a bullish bias. These two purple lines that you see on our chart right there, at 2101 and a quarter, and this high here is 2105. That is the high of the first 5-minute bar. So in the first 5 minutes, we put that range in, and I like to look at that throughout the day because when I look at that, it tells me if we're trading back inside what we used to quote when I was trading on the floor, the opening range. I think the opening range was like a 2.5-minute period at that point back then. The shaded area we're looking at right now is what we call value, and value is defined as I think 68% of the previous day's range. Take a look at 2106. That's the high of value, and I'll bring this up here. And we've got the low of value. Let me shrink this up. Way down here at 2090.5, and then this yellow line here that you see is 2092.75 is the point of control, which means the most volume occurred at that price on Friday, and that ended up being what we call the mode. I'm anticipating the market now. You know, when you're taking a look at we've been averaging about 1,200 to 1,300 points from the opening print on a 10 to 20 day average. So over the last 10 days and over the last 20 days, if you take the opening print and add about 1,300 points, that's been the average high from the opening. This orange number you see here is what we call 2107.75. That's our bull bear zone. We believe that the market has to get above that to really become bullish and get to our ultimate targets of 2112, 2117, 2121. I don't know if we're going to get enough oomph today to get there. Remember, tomorrow we've got Janet Yellen speaking, and we'll see what happens. I can't imagine Janet Yellen coming out and saying anything that's going to be negative to the market. All the people that a couple months ago got long, and I think they'll be starting taking profits off the table at 2117, 2120. So when we talk about these pivots, these 5-minute, this is the 5-minute pivot. This is our proprietary pivot that we've designed. Pat Tabin and myself are been using it for a long time. There are different settings. There's other people who use pivots. These are different than the floor pivots, but we look at these as a gauge for the short-term trend. Now, and there's also this indicator you see here is a combination of moving averages and CCI that we have taken some off-the-shelf indicators and then retooled them for our needs. And when we take a look at this, is what this is what we look at. The opening went down here. This white line is the center line. We look for this to cross over the center line, see if momentum will still go to the bottom. It was red, as you can see, and then we slowly have been creeping up. We've crossed the center line. It's turned green. And then the nice thing about this is when you see this, it will turn red to gray. It doesn't go red to green. It's going to have a period of transition. But one of the things that's kind of hindering our the ability for the ES to rally is both the NASDAQ and the Dow and the Russell are remaining with the 5-minute pivot in a sell right now. So I was showing you the Dow. The Dow is starting to get up there to challenge it. The NASDAQ is below it, and so is the Russell. So we are the only, if you look at our 5-minute pivot, we traded back through it, which was 21 and basically 21 half, so 21,000 even 0.50. That's where our 5-minute pivot is, and then we're currently sitting right here below this area, which was 21,005, which is basically the high of the day. So for this market to get any steam on the upside, I think we're going to have to basically we're going to have to get up out of the top of value. We'll probably test in bull bear zone then, and we're going to need the other indices to get involved with us here. We're looking for a high of 2012 right now, and then we'll take it from there. Here's the nice thing about this software, which is Inside Edge software. Our good friend Charlie Cochran. If you go on our site, manovermarket.com, there are great explanations and different chart formations and so on that profile people have identified. Charlie was one of the first to use volume profile. So back in the day before 2002, the Merck started putting out actual data on the volume on the E-minis, and so now this is it's accurate. And so if you look down here, I'm gonna expand this chart. All right, when you take a look at this, see here, this is all the volume that took place at these prices. So what this is now, it's now price and volume. So and then these letters represent the different time periods of the day. B being the first bracket of the day, then C, then D, then E. So one of the things that stops the market activity is low volume nodes. As you can see, we are in uncharted territories because we are in what we call brand new highs. So that's what we're looking at. When I look for moves to be extremely let's say accelerating in one direction, I like to see all the sister VS and all the sisters go with it, meaning the Dow, the Russell, and the NASDAQ. So even though I thought I would take care of this at 10 o'clock today, I thought there'd be more volume and activity, but I think with Janet Yellen speaking tomorrow, we're getting a very slow activity in the market. More of sort of like when I look and I see this on our CCI here, and the market's going here, this just is telling me that the market, as you can see down here, is getting ready to turn green. And then you take a look at these indicators right here. Now that you see we're getting across these averages, so and they're both starting to point up. They're going in ascending upwards. So this is telling me Pat kind of designed this to be idiot-proof for me, so I don't screw things up. But at the end of the day, we got green, green, and we've got green, and we've got green, and it's going in an ascending manner. Now, also, that's something that we have. This is a dynamic VWAP, which is the volume weighted average price. And then we have instituted standard deviations that we look for the market to move from. And these yellow dots are also our sort of claim to fame that we've programmed into our screens that allow you to see exhaustion areas. So if you look at this, based on that, we're looking at 2105 half should be attained, and so on. We're sitting right in the middle with very low volume and not a lot of activity. So this is, the important thing. I'll be watching this to see if we move back down here. This pink line is the center line, and if we stay in this area and this stays green, I think we're just going to get a slow grind up today, and that's what I'm looking at. I wish the market was moving faster so I could give you a little more activity. But remember, if you want any questions, you can put them on Twitter and we'll try to address them. All right, well, then I'll talk. I'll just keep talking. All right, so the nice thing about this, the TOS software here, is that if I want to look at, so here's another indicator. I keep these on a different chart, but if I wanted to go on the same chart, I can go to 15-minute, and I've got the same information on this time frame. I leave my chart on a 5-minute time frame, and so we're looking up here for us. The 15-minute pivot is sitting at 2106.75. 2106.75. So that's telling me that the 15-minute pivot's in a sell, and it is sitting above the top of value. And then I can go to the 30. I can bring this and bring up the 30-minute. This in a 30-minute time frame. So the time frames I like to look at are the 5, 15, 30. I look at the hour chart and I look at the 4-hour chart. So those are the kind of time frames we look at. And this is the 30-minute with 30-minute pivot up there too. So it's going to be a little struggle if volume doesn't pick up for the market to make one move or one way or the other. So that's what we're looking at this point. I'll go back to the 5. All right, hold on a second. So, we shade these areas in that let us know where value is and so on. And the important thing is, the longer the market stays in value, the greater the chances that you're going to get a move one way or the other through value. So that's an important factor to remember. We're back to the 5-minute chart, which it's getting a little toppy here. But the important thing then for me, the CSI here, the CCI is turning green. I got a green here. All right, I've got this a crossover here. Okay, and momentum, even though it's slow for me, it's still going to the upside.
Okay, we got a question.
Go ahead.
Take a question.
Yeah.
Will you please explain how to trade a 5-minute rotation, entry and exit?
All right. So if we go, well, not at two different things. So as volatility picks up and slows down, actually this software right here, okay, is a good way to look at it. I have to open up a different chart, but this will automatically calculate what the 5-minute rotation is. So if we look at it now, about 3 weeks ago, the 5-minute rotation was 600 points. That means that in the average move, so if you were here at 2103, okay, let's say you made a low at 2103, you had 600 points to the top, you would be looking for the market to go up, what is that, to 20, I would get my. All right, so let me add this up. Hold on, give me a second here because I screw things up all the time. So if I was at 2103 plus, now the average rotation right now is 4.75. That would put the market at 2107.75. So I'd be looking the market to move if that was the low. So when I get established lows, so we got an established low right now of 20.9975. So what I do is I go to the 20.99.75 plus 4.75 equals one rotation, which would be 21.04 half, and then plus 4.75. Second rotation would be 21.09 quarter. And I think the market, once they start going in one direction and they're going to complete, they like to make 3 rotations. So I'd be looking for a high today of plus 4.75, somewhere around basically, was that 211 or 212, which is that's the high that I've been talking about. Also, SPZ trader Fowles, who we talked over the weekend, he's done some Fibonacci extensions, sent me a chart this morning. I posted it on Twitter, looking for an extension up to basically 2117 to 2120 based on where you're picking your load to put your Fibonacci extension on there. So, you know, with Yellen speaking tomorrow, I think she's going to come out and be positive, but I think when we get up to that area, you're going to see the longs that have been in the market for a while are going to be taking their longs off up there. So once again, we're trying to make a test and make a run for the top. I hope I explained the range extension, because the range extension or the rotation is a very simple concept. You know, I like to see. So right now we've completed one rotation, because if you add 475 to the low, I think that was at 2104, that area, and so we want one rotation up. So I'm looking for the next rotation to be 475 from here.
Ready for another one?
Yeah, go ahead.
Okay. Casino Girl wants you to go through a CL chart if you could. Crude oil chart.
I can't do it right now. I shut all my charts down because there's too much load on the machine when I'm broadcasting, so I shut down the L1, the charts. I did it on our morning call. If you want to look at the chart there, I can tell you that we had thought gold would move down between 48.50 and 49. It made a bottom this morning. I don't know where it's at right now, but I had thought that we have a bullish bias and was looking for it to move back inside value. Let me see if I can get a gold quote.
I'll repost the morning call video too.
Okay, there you go.
All right.
So, and then also we have a negative bias on the bonds this morning. We were looking for the bonds to trade lower. You know what? Let me see if I can hear it. I'll do it. You want me? I'll throw this here. I can do this. Let's go /CL. I can do that. Let's do it that way. All right. Except my values are going to be off. I don't have this. This chart is not my chart for gold, so I won't have my value areas and so on. All right. Okay. So gold, you can see here's the lows down in here. Here's the opening range. It's trading higher. I had said this morning I thought the market would move back towards their value area low. In fact, here's what we posted today for oil. The value area low is 5107. The mode was 5183. The high was 5197. Bull bear zone 5070. Okay, and the daily Florida trader pivot was 5132. 5132. I don't like to do this because I have to program all that stuff so you can see it, but that's where we are with gold. So, like I said, here we are, 25. We're starting to move up. Let's see if we have enough to get outside of value. All right, we're up above the high of the first 5-minute bar. 2106 is the top of value. Now, based on the range is so small, if you take a look at this, you can see that our 2107.75, that would be what we call the 1.5 times the IB range. So if you take the IB range, which is, if I split this at D, B and C, so you got the high and the low, you go 1.5 times that range, the high and the low, you get to, and the nice thing about the Inside Edge software, it prints it up for you. You don't have to get a calculator out or do anything like that. So 2107.75 would be 1.5 times the IB range. And then 2110 half area is 2 times the IB range. So this is a very small range today, and like I said, I think it's because of all the news coming out tomorrow.
Got time for a question?
Go ahead.
All right. How do you calculate the value area?
All right. Take a look at this chart right here. Okay. This is the overnight action right there. That's overnight. Let's make sure we got this. So this is yesterday's action. Let me split this at B. Okay. So Fridays, this is all day Friday. Okay. So see this number right here? I don't have to calculate it. It's calculated. The software does it. So the low of the high, the high of the value area low, sorry, is basically right here, 2085.75. See all this blue from down to here? That's the value area where it starts, and that goes down to the low. Then all the black area you see in here is value, and then the value area high starts right over here, 2106, which we're starting to test right now. Okay, and then this purple here is that's 2107 half, which is the bull bear zone, and also that is our I had put the wrong value area in there, so I mean the wrong mode. The mode is way up here at 2107 half. So on the close they put in all this volume at the half. Also, when you look at the software, this green is the 50%. They call that the mean between the value area high and the value area low, right there. So I calculated the value area. I wrote down the wrong number. Got to catch that, Ant.
Okay.
Oh, it's up here. I'm sorry, 2107. There it is. There it is, 2107. That's the mode from Friday. I like to see that. When you see that, that becomes the attractor for us because they put a lot of volume at the number. So that should be an attractor for us to get that getting up there. Let's see if we can start getting volume. Here we are with our CCI. Green, 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 green dots, green crossover, ascending value.
Ready for a question?
Go ahead.
Who is speaking tomorrow, and why might that impact today's trading?
Janet Yellen is talking, who is the chairman of the Federal Reserve. She's not that important. I'm not there. She's not that important. She's important, but I don't think she can say anything that's going to be negative because, you know what? I've been screaming for 2 years now that we're printing money and the Fed's buying our bonds, and you know we got our monetary policy is quantitative easing, and you know in there we had to do what happened because of 2008, and when you take a look at it, we are ahead. Our economy is stronger. Europe and the rest of the world are having problems. Our interest rates are low, and everybody has a flight to quality. They're buying our bonds. So I think she's going to refer to that the economy is getting stronger. I think they need employment income to get stronger, meaning that people have to start making more money because they want to have some inflation in the economy, and that will be the catalyst for the market to move higher. So Janet Yellen is speaking tomorrow at, I think, 10 a.m. Central. I'm not sure. Go to the news. Any other questions out there? I mean, there's not much I could tell you. You know, if you were long and had multiple contracts on here, this would be a good place to take some off, and because it'll be a little bit of a struggle to get through the top of value. Okay.
9 o'clock Central Time.
What time?
9 o'clock.
9 o'clock Central. Janet Yellen will start speaking, and so, like I said, I don't think that she's going to say anything that's going to be extremely negative on the market. I think she's going to be extremely positive. One of the things we always like to see if a market's going to keep moving is that you most definitely have to take out the Globex high, and the Globex high is basically 2108 even right here. This is all the overnight action, okay? And then this is Friday's high, 2108.75. So.
Okay, they want to know how you calculate the value area on the chart as opposed to on the profile.
Oh, you mean the gray shaded area? If you're talking about the shaded area, that's just the program that we've gotten off of TOS, and we just put them in there and it shades it. It's still the same. This shaded area just represents what the profile value areas are. I like to have that up and running when we're trading. So now, like I said, here's a couple things I'm looking for. Top of value. Looking here, if you can see when this gets up over here, this indicator is telling us the market's starting to get overbought a little, and we kind of look for it. But when it's slow like this, like if you saw this move right before the opening, it rallied, broke down, came down, made another bottom here, and then went back over and crossed over. So when I look at this is fully cycled now. Basically, you had a red, gray. Now we're back to green. This will have to go through a gray period, and these indicators will have to start to cross back the other way. So you know what? It's a good tool. Helps you stay with the trade if you're in a trade, and gives you an idea about momentum and market direction. Any other questions out there? Let's take advantage of the idea that this is a very slow trading day and you get questions, because if the market was flying around, I'd be less attentive. No. Anyway, so as you can see now we're in bracket E. The market, one of the things that they like to see in the profile, this bottom looks finished to me, and but if you look here in bracket D, it could have made more of a base down here, but I'm looking for the fact that we've got Yellen speaking tomorrow, slow volume day. When you get these slow volume days, you get the drones in control. Looking also at some other software that we use, showing us there's about 4,000 contracts offered between 2106 to 2107, which I expect that's what we're talking about. If this is going to be the attractor, the bull bear zone, and the top of value.
Got time for one?
Yeah, I got time for a lot of things.
Can you explain what a unfinished volume profile would look like?
All right. Okay, let me try to see if I could find a couple of, Okay. Take a look at this. See this right here, the WF. To me, that's unfinished. There's no top to it. Okay, and then you take a look at this one. This is too many single prints. You need it to sort of look like this bottom. See how this bottom looks, where you have BC and it came down here, and then the tail stops. I thought D would have maybe came back down inside here. Okay, so here's an unfinished look. These two here. All right, see this IJ? unfinished to me. Now, eventually, I think the market's going to have to come back in this area because these are very low volume nodes. Okay, but I'm not going to get in front of that train now. That's not what I'm going to do. All right, and then take a look at this right here. See this BDEF? I think that this is going to fill in eventually. Okay, all right, that looks finished. So they're take a look at this one here. You can see over on this side. See how this tail was about 4 tails? There wasn't enough profile in here, and it eventually got finished. So there's not enough prints to finish it, right? So, you know, this is unusual to see this. You see these 3 ticks that go across, and then 2 on the top. Usually you see another move up to the T. Okay, it's like this. You see M, MP, then the 3, and sort of how they finished on the day on Friday. So that's what we talk about unfinished.
Where's the point of control?
Point of control is up here. You see this MNP? See, it's in purple. Okay, so the overnight point of control last night was 2103. So the most volume ticked at 2103. It's in purple. Here it's at 2107 from Friday. It's great software. It identifies it for you. Like right here, you put your cursor on it. The point of control there on the 18th was 2095. One of the things that I also look at, let me see, I hope I didn't erase that chart. Right here. All right, so this is a 20-day profile. I mean, this is a running 20-day average. So we've got the high of value at 2108. We've got the point of control at 2093. That's the average over 20 days, and we've got the value area low. I think I got the chart on top of it, but so I like to look at this the 20-day moving average in mode. Okay, and you can see, and this chart right here, this chart is day only. So we don't have any overnight action in that. So we're still a little struggling trying to get out of the top value. Just think that it's going to be this slow grind today.
We want a story from the pit.
Who's asking that?
A couple people.
All right. Okay, I'm going to take off screen sharing because I'm going to take my glasses off because I don't like the fact that I can't see anymore. What did I do? All right, stop. Let me see. Here.
Good.
Am I now? Am I not?
Yep.
Okay. So you can see me now?
Yep.
All right, great. Okay. I'm going to incorporate this story with questions that I get a lot about. Okay, so we're going to talk about how long does it take to become a good trader or a successful trader, all right? What's the time frame? So over my years of trading, and I can go back and I'm going to relate and I'm going to bring you back, and you people that weren't born back then, like my nephew over here wasn't born, but in let me get my notes out because I went back 1980. I started trading at the end of 1981, and I was in the gold pit, and gold was coming off the highs in April of $850 an ounce. It was down about 600 to around between $600 and $550 an ounce. I had been trading a year. I was filling and executing orders, and I was, you know, the first thing when you first get involved in these markets is the fact that when I was a young broker, just going in there with a member's badge on, and you're saying, walking into a pit going, half on 20, half on 20, 20 and a half, sold, buy them, sell. Now I'm filling orders and I'm yelling, half on 20, half on 20. You guys going, sell you 3, half on 17, sell you 4, half on 12. So you have to keep your count. You're writing it down. Then the market will go from half to 55, and then I had to turn my deck and go 20 at 50, 20 at 55, 20 at double, 20 at double, 20 at double, buy 5, buy 7, buy 4. Now you have to keep this going on. So just the fact that you had to get used to yelling and screaming was actually one of the, it takes you about 3 or 4 months to get comfortable with that. And the fact that I was filling orders was added responsibility. I wasn't just trading for myself. I was getting paid for executing these orders. So one of the things that happens when you fill orders, it's called an out trade. So I was bidding half on 20 for a customer. Say the customer was Merrill Lynch, and they would say, sold, sold, sold. I write them all down. I go, I got 20. When I send it to my clerk, goes back to the desk, and I only had 19. They come back to me and they go, hey, you're short one on here. Well, now the market's trading at 55. What am I going to do? I have to buy one in the market, lose $5 on the trade that they were paying me $3 at the time to fill, and write the difference. But $5 wasn't $3. It was $5 was like $50 out trade. So I had to write the clearing firm a check for $50 because their client was supposed to be filled on 20. I only filled 19. So that stress was always part of the program. So literally, it was April of 1982, and Argentina invaded the Falkland Islands, which is a colony of Great Britain. So Great Britain was sending battleships to go down there and destroy the Argentinians that were in to protect their colony. So basically, what happened was gold rallied $50, okay, and rallied like $50 in a week. And then on the way down, there was a rumor that they had surrendered. The Falkland Islands people surrendered. So then the market broke $50 in like 3 minutes. And I'm filling orders, and I'm buying orders, and I'm filling orders, and the market's going crazy, and I've got my pockets, because I would do trades with people, and I would write down what I did with them, stick it in my pocket. I had 2 pockets full of stuff. My clerks had it. I would write the price down, and so on. And then the rumor came out that the market that they didn't surrender. So then the market rallied back $50 in another 8 or 9 minutes. And I'm filling orders through this whole time. So now the market slows down, kind of stabilizes because the rumors came out. Now I'm checking all my orders, and I'm looking at them, and I'm talking. I'll never forget this. Good friend of mine forever. His badge was MMMM, Mike Manini. And I look at him and I go, Mike, I sold you 50 contracts at the low. And he looked at me and went, I go, Mike, I sold you 50 contracts at the low. He goes, I go, Mike, stop shaking your head. We got 50 contracts. It's $70,000 disputer. He goes, I sold you 50. I go, you sold me 50? I sold you 50? That is a sell-sell, okay? Because you have to have a buyer and a seller to be matched up. So that's a good out trade because I bought his 50. He bought my 50. We got out in the market. I made $70,000 on that error. And the S&P pit opened up like 6 or 7 months later. I moved over from the gold pit. I was thinking about quitting the exchange, moved over to the gold pit with 70 grand in my account, and I was able to take that and become the biggest trader in the pit at one time. So in 1987, I think I made $4 million and was written up in US Today as the single largest trader of S&P futures. Individual trader. So there's a quick story for you. Any other questions? So the reason I want to tell you that story is because if you're doing this, you have your own out trades. I've gone through it. What do? You think you want to put a buy in? You put a buy in, you put a sell in electronically. How about when you put stop orders in and you forget about where they're at? Okay? And you get out, you think the market's great, and all of a sudden you get a notification you're filled on your fill. How about when you put orders in that get filled, you didn't see it, and then you add to it. So there's mistakes you're going to make doing that. So just getting used to the software. How about when there's rollover? I still go through this. I want to throw the computer out the window when this happens. When the market, when they switch from rollover in the different months, and you have to go in and change your codes and so on. It's okay for the young people and people that are more computer savvy than I was, you know. So at the end of the day, there's a lot of different things. And then you have to, you know, this business is the only business when you put a trade on, okay, I tell people this all the time. How would you, if you went to work in your regular job, and at the end of the week you worked as hard as you ever worked, you had the most stressful week of your life, and your boss told you, you owe me $3,000. Well, that's what trading's like, right? You could trade all week, work, do your charts, you're up in the morning, lose your sleep, you do everything, and you lose money, and you got nothing to show for it. So it's a very difficult business, and it's gonna, you have to learn to deal with the risk, the stress, the preparation, how you're gonna, when you put trades on, when not to trade, when to trade. So I tell people if they can break even after a year, you got a good chance of making money. So that's my quick pitch story, and I want to take that story and show you how it refers to, or you can use it in your computer life. What else we got going on, Anthony?
Okay, so the point of control that Pat gives in the morning is the 20-day, because it was 20.9275 and now it's 20.07.
You know, I don't know if Pat. I'm looking at the software here, okay, and the mode to me, you know, let me reset the splits today, okay, and reset the daily splits, okay, and so now I'm going to go back to here, and this is the day only. Then I'm going to go over here, and I'm going to click on B, okay, and when I look at that, okay, the point of control is
Lewis,
right
bring
here.
up your screen share.
Oh, I'm sorry. I think that what we put out on the site today was incorrect, because if I look at this, this is the purple area, 2107, half, and I think that's the point of control. Sorry, because I went back, set the splits again, split it at B. This is all the day action from B. Now, we used a couple different softwares, and one of them is TradeStation, one of them is Inside Edge, and then when you look at, let's look at Toss's point of control, because their point of control, they don't use actual volume. What they do, their point of control was, they're at 2103. So that was day only. And the difference is this. I'm going to tell you why Toss is different. Because Toss doesn't do actual volume. It goes to, it takes the minute by minute and then estimates the volume. And they're close, but a lot of these softwares sometimes are have different. So Pat may have used his TradeStation software, and that's why we got a different point of control. That makes sense? I hope. All right. Like I said, I thought that 2106 would be an area that we couldn't get through right away, and you know, it's just slowly just ticking up. You know, I just think there's a lot of, well, let's put it this way. I don't think the longs are afraid of what she's going to say tomorrow, because we didn't retrace very far. So I think that what Ms. Yellen's going to say tomorrow is going to be positive for the market, and all the people that enjoy her commentary are going to probably be taking profits up at 2117 to 2120. Anything else?
They like our new background. They like our new background.
You like the background? I got that from a Chinese massage parlor. No, I did not. I'm sorry. But my daughter, who goes to Northwestern, came in and she said that to me. What is that? Where'd you get that from?
You can't see you anymore.
Oh, you can't see me? Oh, all right. Sorry. I like the background. Okay. Well, I'm going to get a picture of myself up there, because from the old days, and we'll in the pit, and we'll be able to that. Or I'm going to get a picture of frozen Lake Michigan. It is freezing here in Chicago. And anyway, did anyone see that movie last night that won all the awards? Something Budapest or whatever. I know it's got to be a terrible movie. I know it has to be terrible. Hollywood liked it. It has to be terrible. I can't. Unbelievable. When I didn't see any of those movies. I didn't see Birdman. I didn't see. I did see the Sniper movie. I thought it was very good. I thought it was. I guess there's a lot of. I guess Michael Moore didn't like it. I don't know. So we're here. We are struggling to get out of the top of value, and I think we're going to struggle to get to the bull bear zone today. Just there's no volume. I mean, I think we average on a and that's been typical. And the last week was a really, I'll tell you what was frustrating about last week, right? Because the market traded in a range from basically 99.5 down to 87.5, and basically on Friday, all right, and this is typical. They took out the bottom end of the range. They make everybody think, all right, we're going down, right? They stop down there, and they turn around, and then they go and take the top end of the range out, all right? And on Friday at 10:30, I kind of said. I thought this was going to be a trend day, and this was the key to it when we got to this area right in here. When we left this wedge like this, and after we got through 93, we could not make a pullback more than 200 points. So this is what a trend day looks like. Now remember, on a trend day, you probably only get those about maybe 3 or 4 days a month. Mostly days are basically they are stay with inside both ends of value. So, or go out one end of value and then go back up. So this kind of burn this one in your memory. This is what a trend day looks like, and it got fat. It made these highs, and then it's usually 2 or 1, 3. So it doesn't spend a lot of time at different prices. So this could be considered I don't think it's going to be a trend day, but I think that we have an up bias like we said on the opening. We thought it would cover the print. We came within 1 tick of that, and the market's been going up from there. So that's what I'm looking for. I think that the market's going to probably try to take an attempt to take out the Globex high. If you have any positions on, unless you're going to take it into Janet's speech tomorrow, I would be liquidating there if you're in your long position. Anything else?
Nothing new.
Nothing new. Sorry, you guys have not gotten in a situation where you see me frantic. You won't never see me frantic. You'll see me, or you'll hear me being frantic. Anthony now has he has permission to grab me by both arms when I grab my monitors because he knows they're going out the window. So, and he goes, Unc, I'm going to have to stop you.
2 or 3 monitors a week now.
We're trying to get a deal over at Fry's to see if we can stop throwing the monitors out the window. Anything else? Let's see. What else could I talk about? What else is in the news? I think that the other thing about gold that's going on is the fact that everything's calming. It's really funny when you take a look at funny or ironic, but you got to follow these things. The Greece problem is kind of they've got a tentative deal. Gold's going down. Oil I think has come disconnected from the market at this point, but and I think that there was a report that the world central banks are buying gold at alarming rates, at rates they've never ever seen before. So I read the report from Davos, and it basically the message that came from and if you read it on our blog, Chris Kahn does a great job with our blog, and the message was everybody in Europe that's in that EU has to do the same thing. And the message was, if one bank stops spending, and that means not lending money, and sits on their assets, it will not be good for Europe. So they're going to start trying to stimulate, and it looks like where they're going to stimulate, sort of like what we did here in the U.S. or we have to do in the U.S. is spend more money on infrastructure. And if you take public and private money to spend money on the infrastructure and technology, that's what they're looking for. But if one of the big banks in the EU says, well, we're not going to do that, we're going to sit on our capital, it will ultimately be self-destructive for all of them. So,
yeah. Question here.
Go ahead.
What did you see so early Friday to call it a trend day, even with the poor finish?
The poor finish? Well, right here, so we made our low. We had a bullish bias again on Friday. We made the low, and right here was 20.93.5. Now, if you remember on when we this is 23.90.5, okay? If you remember on Thursday, okay, see this longest line of letters right here in this area, how that was support on Thursday. We kept going down to here, okay? All right, and here's that. Remember we couldn't rally. All right, here's 20.99.5. We kept going from 3.5 to here. All right, so once we got through here, okay, when I see a base like this, well, I'm seeing, all right, well, we got through it. So it looks like we got through it in bracket H, and bracket H kept going. Then I opened up, and it kept going. All right, and it made two single letters, and then J. So, after I saw this with no pullbacks, I was convinced at 10:30 in the morning that it was starting to look like a trend day. Now, the things that hold on. Also, all right, here we are. The Dow is now taking out its 5-minute pivot, so that's helping us with some momentum. Okay, so the 5-minute pivot has now been taken out, and it's down here. Okay. The Russell is taking out its 5-minute pivot now. Okay, you can see that, and this is the only weak sister today, the Nasdaq. Yet it's the other one that's up on the day. So go figure. All right. So we're down 2. Dow's down 32. Russell, but the Nasdaq's positive, and the Nasdaq's the only one that made a switch today. It actually was positive when we started the day, went negative, and now it's sitting below the 5-minute pivot. So I think towards the end of the day, if the Nasdaq keeps rallying and we get in the positive area, we will rally. So after this base, and because this was such, it took us, I think there were 6 tops up here. Well, look, there was bracket B, D, there was bracket E, F, G, and H. Okay, so basically it spent almost 2 hours there before it took it out. And then once we took it out, we only had 2 letters, and there was no pullbacks. I mean, all the way into the close, I don't think we had more than a 200-point pullback, 200 to 300 points. Now, when I see things like that, and the average rotation is 4.75, that's telling me that the market is
canceled.
The market is in a pullback. I mean, in a trend day. So that's what I saw.
Ready for another one?
Yeah.
When you traded in the pit, did you keep positions overnight?
Not intentionally. No, sometimes. Sometimes you have positions because you had out trades the next morning. Yes, I did, but nothing like I traded in the pit. I mean, when you're in the pit, in my heyday, it'd be nothing for me to be long or short 100, 150 S&Ps in the bigs. So you're talking $3,000 a tick sometimes. So there was a lot of stress then back then. So I didn't really take positions overnight. If I did, I used to when options came out, I started trading options, and I actually wish I would have paid more attention to options because there's some strategies you can use that are beneficial.
Got time?
Yep.
All right, ZB are up crazy, and so are the futures. Can you explain that?
Who's up crazy?
The ZB bonds?
You know what? Are you looking at the? I haven't looked at the bonds. You know, the bonds going up is not going to be negative for the S&Ps. I mean, I think you know, the bonds going up just means that there's lower interest rates. There must be, with the bonds rallying, I think Yellen. I'm going to tell you something. If those bonds are rallying and they're going higher right now, that means she's going to say nothing about rates tomorrow. That there's going to be no mention of whether she's going to be thinking about raising rates in June. So I think that there's been other Fed people that have come out and said that if the economy is getting better, we've got to think about raising rates. I do not think we can raise rates until we get some, until wages, people are making more money. Okay, unemployment's one issue, but you know, if you take a look at, and this has been the disturbing thing about our economy, we are working harder and making less money. So, and that's if you have a job. So those are the things that have happened. So I think they want to see the employment index start to go up before they start raising rates. All right, we're getting a little bit of a sell-off from the top here. Okay, but you know, my intuition or my experiences tell me I do not think this will cross the center line. I think it will flatten out here. It's just a little bit of a pullback. What is the high? Let me see. What is the high of this move? So I would take 2106. I would subtract 475 from 2106. That would be, you know, an average rotation. One average rotation. I have to do this on my calculator all the time. So I mean, it could go back to 21 and a quarter, 2101 and a quarter. You know, I don't know. I just think that it's just a slow day. You know, that's why I think we didn't get through here yet. The Nasdaq is still down. Did I show you the Russell? The Russell went through. Here's the Russell. It went through its 5-minute pivot, and it's starting to pull back a little bit. Same thing with the Dow. So I just think it's going to be a slow grind up. A slow grind up. That's what I think we're going to get.
Tim says it's a grind today.
Yeah. Yeah. You know, and that's the hard part. Like 3 weeks ago, we were having 3,500 point ranges. You know, and when you get these slow grinds with a small range, and you're wrong in the morning, you can't get it back. And someone asked me this morning. I was doing a thing on Top Step Trader about vengeance trades. Yeah, you're mad because you missed the trade, and you know you should have did this and you should have did that. I'm going to tell you right now. When you miss the trade, forget about it. And you're talking to a guy who, after 30 years, still gets mad about missing trades.
Can't see you.
That's okay. You want to see me again?
You got about 2 minutes.
Go ahead. Any more questions? All right. I will try to do this again on Thursday. Hopefully we'll have more activity. And on Thursday, we're going to do it again at 10 o'clock. And then hopefully you guys you're learning something here, and we're doing some. What are you gonna do?
Don't want to see your face.
Okay.
There you are.
You can see me. All right. There we go. All right. So Thursday, I think we got a plan for 10 a.m. again, and then we're gonna hopefully there'll be more activity, and we'll basically see where the market is after Janet Yellen speaks tomorrow. I would love to do this during a Fed time, but I don't think that it'd be a little distracted when she starts speaking. And here's one of the things I always notice when there are numbers coming out and so on. You usually get 2 fake outs, and then the market goes in the direction that it's supposed to be heading. So let's see what tomorrow brings. If we get up to that 2120 area and starts pulling back, then I think the market could go back and retrace and fill in down below from where we came from. I think that the Bulls are going to be taking some of the profits off the table up there.
One more quick one on.
Go ahead.
They want to know if you're a Cubs or Sox fan.
I'm not a real baseball fan. Okay, I'm a football guy. Coached high school football. Love college football. My son's playing college football at Western Illinois on a full scholarship. Think he may get to the pros someday. He's built like Julian Edelman. But if I have to choose, I'm a Sox fan because my wife's a Cubs fan and her family has season tickets. And Wrigley Field, they don't want. You could take everybody in Wrigley Field, turn them around, not even look at the game because they're there to see all the hot girls. I'm just telling you. All right? That's the truth. I've been there. It's the only time I go there to see all the hot girls. So I am a Sox fan. I actually, my sons, from my first marriage, used to live in Bridgeport. So that's right by Mary Daly's old ward. And they are Sox fans.
That's it. We're in love.
All right. See you guys later. Hopefully you enjoyed this. I'll talk to you later. Got it, Doug? All right.